Hey everyone, I'm still sick, so probably not gonna say too much, but I did want to cover earnings. I did want to cover XOM too, but I'm not sure if we're gonna have time. Did anyone trade or swing? For our 148 target. This was I don't have the core template here. Go back and find it. Here it is. Okay. These are the exact ranges that we were looking for on XLM. X1 is basically moving in 21-point increments, I think we said. And I noticed no one really said much about it today, but this has been a really clean move. And we discussed that in the report too, that we can probably just keep a closer eye on oil this week. Which I feel like not many people did, to be honest with you. Well, it's not about the overnight trade. Like, that's a good trade. It's more about, like, the swings. I just feel like not many people in here do those swings. And the crazy thing is we knew that silver and gold had those massive overheads around here, right? And, like, look at the rotation. That's actually insane. And we talked about this happening, and we knew the flip date, too, was on the 29th for silver. And you can see the flip, the rotation back and out of there. I know crude is still stuck a little bit beneath the 66 mark, but the fact that it tagged it, that's okay. But just study this, because this is a really good potential continuation break. Set some alerts, okay, on XOM, specifically off like that 148, 149 mark. Because I think we said that if that sees that continued break, I'm gonna have to clean this up a bit, hold on, because I don't remember what that mark was, but I think we said that if we start measuring, I'm just gonna delete this quickly, if we start measuring off the actual structure ranges that broke, so off of here, do you guys see it? I'm just gonna post updates on this because this is okay. That's as close as it's gonna get, like close to like, and I'm talking about these actual structure breaks. So my calculated spot was 126.87, but I did want to talk about, and can someone note 2 if ES breaks beneath 6906. But we can put the actual marks on here. Let's maybe mark them in a different shade so we know. But if we take these areas here, basically, yeah, it's right around there, like 148.34. But off the actual calculated mark that we had, which was 126.87, I think it's closer to like 148.09 or 148.08. Somewhere around here. And then off these closing candles, you can, what is that spot? 54, so 120 or 147.75. 147.75. Okay, do you see the overhead here? Like, it should be super, super clear. Okay, let me just post. And then we said if and when it does get like that final structure break closer to like here, 148.57 or like 48.58. And this isn't even the full clearance break, by the way. This is just off of these ranges right here. Okay, so off the actual 21 point intervals. This is just in correlation to these bars, okay? So maybe let me just circle these so you guys know what I'm referencing here. So what's that spot? 151. We'll just mark it 151.40. And then the actual clearance break should be off of basically this 131.62. So, which pretty close to in here. Like, it's just beneath 153. Okay. Like around 152.90, 152.81. This is basically the range. Okay. And these are going to be some really calculated spots that we want to get to. So mark some alerts on that, because I feel like a lot of people didn't, because this is what can trigger another 21 point break. Okay. Yeah, in other words, it could, and you can kind of see that it's already tagging them. Do you see that? Off these clearance breaks. This was just a fib I put in there just to kind of help structure last time in terms of like sustainment, but you see how it sustained right here? Like as soon as you had like this clearance break above here, look at that. Hopefully this helps make it a bit easier, but I feel like this was a bit more important to look at. And then we'll cover ES here since we have the close and we have Google reporting. But what was that metric that I had on there first though? It was the 59. I don't want to delete that. This is like the wider range metric that I was using. And I think this should be linked with these areas anyway. Yeah, it is. Okay. I would use this as kind of like a cheat code because you could mark this, but then if you mark it off of, let's say here, it could give you like the midpoints, because remember how we said like there could be a lot of overhead close to like 169. I don't have them marked just yet, but basically X1 can go to 200, long story short. Okay, because that would be like the wider clearance break on this if they fully gave us that range break on the year. So I'll just mark these just to have them, because I didn't mark like the bigger extensions on this thing, but these are not going to be the exact increments because I want to get back to ES, but definitely start tracking, especially since they've already got earnings out of the way, so that risk is gone. CVX was another one that you could have done. But we want to see where this thing closes into the close here, because this is really, really important, especially off these calculated ranges. Back to ES. So ES was, I think, pretty straightforward today. It's been kind of like a... So our overnight conditions for yesterday, and if you guys were paying attention into the close, this essentially is going to be the big overhead in general. And we had mentioned that this red area last time kind of becomes like a major area of risk, especially if they take us back to like 6866, 6862, so on and so forth. Our conditions earlier in the week were that we had to test 7022, 7032. Pretty clear that they failed 7032 here. Haven't been able to stream because of being sick, but this is all in the report. And then that 7022 failure on Friday, that was pretty obvious. Then we had the break back up to get back in the channel. 6942 was really calculated. It made sense. That's where they ended up pinning it on Friday, or on Tuesday. And essentially these are kind of like the ranges that we're still working with. It's like the median range between highs and lows is close to 6942, but when I did some math, it's funny because yesterday I didn't get to stream, but I nailed it because we had said that the goal was to get back over 6920 and it needs to get retested. And I did say that they have odds at 318. So let's go back and review yesterday because I never got to stream yesterday. And that was literally exactly when they broke this. Okay, so this yesterday breaking right here, this is really what negated that risk of us basically going lower today. I know it sounds kind of stupid because this was yesterday, but trust me, it has a lot to do with where they closed. And then you can see the 330 break. And I had mentioned yesterday super early that the 6942, like stalling 6933 is what's needed to avoid going lower and you know, clearing that area, right? So this area is a rough support had they held, and no one did the assignment yesterday other than Snack, so that was kind of disappointing. So the goal was to basically get back there. So if they can get us back above 6932, then the goal in mind is to basically get us back to 6942, because this is the calculated area that we discussed on Monday, and it's linked to basically opening range. They ended up clearing it there, taking us there. I think they ended up closing at 6940, 6943, and then the session I think closed at 6943. So pretty close to our channel ranges. This area is essentially half that range, okay, from like when we were looking at this. But if you go back to Monday, and I think the bot recorded it, so I'll just have to get the notes and I'll post them later, but that area was extremely calculated, especially off the opening range, and that 70, where was this, on Tuesday? When market opened, that was the immediate failure, right? And then they took it back. So this kind of just stabilizes it. Overnight conditions were very straightforward yesterday. We just have to sustain the channel, ideally above 6933, so that it can reduce risk. Okay, I think they did a pretty good job of doing that. Overhead for overnight was 69.55 to 65, 66. You can kind of see they started stalling 6-1. 6-1 was calculated. They went back, tested 3-1, 3-2, held, okay. Brought it back again, and you can see the stall at 6-6 right here. It's basically a channel to means, but the channel and means were also calculated. It's not like they were just randomly taking it to the channel and means. Does that make sense? This here, stalling, is what implied that we could get some volatility. Is everyone on the same page? Like this stall right here. This. But the fact that they sustained this overnight implied that they could easily bring this back to the channel or try protecting the channel below, basically. Does that make sense, you guys? Like, just from like a very base approach. This is partially why I figured, okay, maybe they don't fully break down the channel or break back down to like this range in here today. And then you can kind of see when they brought it down this morning, we were looking to see if they would hold our 69.11, 69.12. These were really calculated spots, and I'm not going to go over why they were calculated because it's all in the chat, and they're all in there, and there was 22-point offsets. And we figured that if they hold there, they have to immediately come back and try retracing. They did. This was the break of 3-2. This was the test of 4-2. I don't have 5-5 marked, but 5-5 is really calculated, like this area here. And you can see the stall, okay? And if you want to figure out why 5-5 is calculated, it's basically that 22-point range, or it's the 68-point range off lows from yesterday. Does that make sense? This is the 68-point stall and range from yesterday. Is everyone still with me? Okay. And from today's session, it was basically the same thing. I know these are essentially kind of like core ratios, but like those 103, 107, 101 point increments. But if you look at this from today's open, which was right in the channel, right at the top of the channel, like 6949. Okay, this was almost an 88-point break from opening range. If we go back and look at this, and I said it earlier this afternoon, if they're able to hold 6861, 6862, because this was pretty clear that they failed 6931 here, right? And sorry, I have this in here twice because I marked this from the other day. That's why it looks kind of messy. Okay. You see these stalls here? Okay, this was the confirmation that they want to continue short. And this was the failure of that 69, 10, 11 basically. Here they held the zone. This implied that they could take it back to the zone. I would say that had they stalled closer to 10 or 06, you guys with me? Then we would have had a much higher odd of breaking this area here and probably going back to like 6854, 6856, 6858. Does that make sense? I feel like this little break right here above these ranges is kind of what decreased our risk just a tiny bit, and even just like the stall right here. So otherwise I think there could have been a very high risk that they could have taken this basically back down to the channel. So do you see the correlation here? You have to kind of pay attention to the 6932. Okay, so like the calculated ranges, the 6906, 6888, and it is specifically where they held these lows. These are all in the report too, by the way, like the 6842, 6838, these being like potential massive support for the week. This would have been the case, I think, had they not tested here and had they not retraced right here. Okay, so I knew that at a minimum they're going to have to retrace back at least that 22-point range. Okay, which means getting back into the zone off these lows. If you're paying attention, look. Okay, do you see it? Same thing. And this would give us that same sort of odd of getting that 68 to 70 point break, which is basically where they're stalling. Let me know if this makes sense, because I am sick, so it's a little bit harder to explain, but the market's basically moving in these incremental ranges. And I think the most crucial part is maybe just going back and studying the closing spot where we opened today, because even where we opened today was extremely calculated, like off that 4.9, because it would take it back to like retesting basically like the areas that we failed here on what day was that? On the 3rd. Okay, like 7016, 7020, 7021. And that's what I was trying to get to. That's why I was saying we have a very high odd that they'll keep this in a zone or channel, especially if they can break these areas here and keep it structured above 70, 71, 78, 88. Do you see the structure breaks? With a ton of overhead at 6932, 6933. The actual 68 point range today off these lows was, I think, exactly where they stalled. And I feel like this is why they couldn't get that zone break today. So 6930.5 was the actual calculated spot today, okay? And I think the reason being, okay, is because, and I mentioned it earlier today, like that was, it's right here. And basically these are the spots, okay? And market's implying that they're going to break in these kind of intervals. And for those that actually care to take notes, then you can just copy paste these or document them on your own time. This is just from the Discord this morning, but these are the same sort of intervals that they're working with. Okay, and these are based off highs, lows, open, close. I'm just literally copying and pasting the exact same thing that I already talked about. So study, okay, because they literally stalled 68 points. And I think the reason why we were at a disadvantage, actually, let me ask you guys, why were we at a disadvantage of breaking the zone? Why do you guys think that is? XOM, by the way, is getting these nice breaks. Why were we at a disadvantage of breaking into the zone? Find my Google template. Oh, actually, no one knows? Come on, you guys. If I'm literally gonna be streaming and talking when I'm sick, then at least try to answer that. The answer is so obvious. Hello. This is clearly why we were at a disadvantage. Okay? And it makes sense. It's that same pattern again over and over and over again. What's that pattern? Same thing. It's the same offset over and over and over again. Had they held closer to 6-6, do you guys think they would have had an odd of breaking? Yeah, obviously, right? There would have been a much higher odd of getting into the channel. And that's why I kept saying we're probably going to stay in the zone. Like the logic behind the trade, this is really important that you understand that. Does this mean that they can't break the zone into earnings? Definitely not. Okay. I feel like it's going to be relative to where in the zone they're trading. So where in the zone do you think we need to be ahead of Google reporting? And it's pretty interesting that these marks right here, if you're paying attention, do you guys see how they're linked back to the real-time stall? Do you see that? I'm specifically talking about these candles right here, but off the actual 4 p.m. sticks, which is right here, I think. That's what increases the odd of maybe tagging those core ranges to like 7-1, 7-2 off where they actually closed at 4, 69.11, okay, 69.06. Do you guys think 69.06 and 69.11 were a coincidence to close? Hey? Well, yeah, I think over 69.22, 69.24 would be the best case scenario. But if you were paying attention to what I said earlier, that's why I was saying, technically speaking, 692432, these were more ideal, okay, to break 3-2. So pay attention, guys. Okay? And I mentioned it yesterday. Like, it's not enough. It can reduce risk, but 2426 is a little more calculated. Basically, 6926, 6932 can net you 7028, 7032 retest. Make sense? So, where do we want to be ahead of 430? And this is so calculated, it makes total sense. Them closing 6906, 6911 is the bare minimum, okay? That's what keeps that volatility alive. Because remember what I said earlier. The thing is it's hilarious because it's just gonna literally be the same thing over and over and over. Okay? So, did that 6906, 6911 close give us an odd of retesting 6933? Yeah, obviously it did. And the 22-point breaks from here would give us that break. Do you see it? So do you also see how getting back over 20 would take you back to yesterday's close? I need you guys to understand these correlations. You have to see it. Do you see this? If we just look at this from a session open, session close, today's open was not a coincidence. Like the fact that they opened here. And I already talked about this. I'll copy paste it again. Okay. Market was moving in these increments. Wouldn't it make sense that they're linked to open close? Let's mark the open closing points. Let's mark the highs, the stalls. Okay. Do you see it? A lot of this should be literally right back to these points. Do you see them? Today's real-time open was 4.9. Okay, if we look at the actual, where was this yesterday? I'm going to mark the 359. Okay, I'm going to mark the 4. Okay, do you see them? I'll mark the real-time ones in white. Do you guys think that that's a coincidence? Like, I don't think so. Okay, do you think this closing stick at 59 or at 6 at 3.5, 3.3 is a coincidence? I don't think so. Okay, these are extremely calculated spots because they're directly correlated with open close, failed highs and lows. Does that make sense? Same thing as this being like a 33-point break would get you the breaks of 6.6. These should be around the 66 to 68, 70-point breaks. Do you see it? So do you understand that yesterday's open and close are directly linked to the weekly open close ratios? Like, you have to try to understand this. I don't know in what way, shape, or form, but at least like try to understand how they're correlated back to these areas. Okay? Today's open in real time actually gave us a decent advantage of getting back to 70.17. Do you see it? Which was literally the stalled highs from the prior week. And from Tuesday. This should be linked directly to the 70.29. Okay. And this area here, right here, around 6.6, 6.5, just please keep listening, needs to be linked directly to that 3.332. Just everyone on the same page. I'm trying my best so that you guys can see the full picture because it's so important to see it. And I feel like you guys are not, you're not seeing it. I would bet money that this range in here is probably linked, you know, heading back to, do you see this? These failed overheads around 70.22. And the bigger structural breaks is what would give us an odd of basically taking out 70.43 and finally testing that 70.48.49. Okay, like this is on the bigger picture. If risk stayed on, okay, you have to understand that there's there's those odds, and you can kind of see how these are kind of correlated here, like around these lower highs for today's session and the lows into the close. So this is this a calculated low right here around 6.892. Yes, because 6.892 is directly linked to 6.961, which was that stall in real time. Do you see it? And the same thing can be applied in the inverse, right? Like if we get some mass volatility, do you see how 68.25 could come into play? I need you guys to understand the weekly report. I just feel like you guys are not fully grasping it, and that's a concern. Like you have to try to understand it. Okay, off where they actually closed, you see how 6842, like this is what can put us at risk. A lot of it's also relative to where they take it to just ahead of earnings. Okay, 6911 is more closely aligned to 6844. Whereas like the 6925, even though that could still put us at some risk, it gives us odds of at least holding 6858, 6866. Do you see what I'm saying? Versus heading back into like the zone or channel. And like max downside risk, I think, is why we would be at risk of the zone being in play. And that's the same thing as the 68 to 70 point increments down, which is going to be 6788, 6791, 6792. Do you understand the full report? Max risk, max reward, basically. Okay? So, what's the best area for us to basically sustain? Okay, I'm going to mark all the areas of risk below. Close to 4.3, 3.8, 4.2. This is the area that they're keeping it neutralized, aka those mid ranges, and it makes sense. That's why they're stuck there. This is the area that's like good but not great. It would still keep us stuck neutral around 7K, which is literally where they stalled in the previous week. Right here, if you guys remember, this is what I was referencing earlier. This stall right here. Okay. And that's why they brought it lower, because they couldn't get it to clear higher. I streamed that day. And this is why clearing here is what would give us the best odds of getting like the full structure break, which basically would give us our 70.58. Does everyone see the big picture? This is important. This is like full range, but I need you guys to see it. And I don't know if this is the best way to show it, but a lot of this is going to be where they take this to just ahead of these earnings. So specifically now, okay? Where do we want this? Let me turn this on one sec. Okay. Good reaction so far. Okay, where do we want this, guys? We just talked about it for 4:30. Obviously, a minimum of 6924,
ORLY, O'Reilly Automotive, reporting 71 cents. The estimate on O'Reilly was 72 cents, so that's a penny short for Oscar Romeo Lima Yankee. Sales of 4.41 billion. The estimate was 4.388 billion. So that's a beat on sales. Earnings coming in a bit short for Oscar Romeo Lima Yankee. MUSA, Murphy USA, reported $7.53, $6.56 the estimate, so that's a beat. Revenue of 4.74 billion is below the 4.858 billion estimate, so that's a miss on revenue for Micro Uniform Sandy Alpha. WEX WEX 143.70, $143.70. That does not compare. $2.41 is the gap number. The estimate $2.13, so that's a beat on the gap number. Revenue of 672 million. The estimate was 661 million.
Can you guys hear, by the way?
WEX $4.11, the correct adjusted number, so that's a beat. The estimate $3.92. That's Whiskey Echo X-ray. Alphabet shares moving up again now. $3.38, up about $5.
This is the perfect range, guys. Here. Okay, this is a perfect range to try getting back ahead of these earnings. 6926, 6924, 33. This is the exact areas you want to break, and specifically to get us back here. And like I mentioned earlier too, I think them sustaining here is taking us directly to basically retesting our highs. Okay, this hold right here was extremely calculated. Okay, and taking this out is like I said, what would give us those odds of 699496 7K. And I did mention earlier that it seemed like ES had pretty good odds today to get back to 7K, but a lot of it's going to be relative to what they do into the close. So specifically into like the 4:30 period, not so much the actual real-time close. I think the real-time close is 6911, 6906 is linked to 6933. So that would make sense, because like these areas here, These are the 17-point breaks. Do you see it? The 22-point breaks. Do you see it? And specifically off like our 59 sticks. Okay. And more in line like with these. So we should be getting very close to testing those 32, 33 point ranges here. I think we are right now. And so that's basically half the range. Anyone taking advantage of this overnight or trading futures? The calls I took off 6-8, 6-6, and 7-1 were for tomorrow. Like I was telling you guys, especially since they had that really good structural hold above 7-1. These are our 346 point ranges and our 173 point intervals. So this is what can essentially get us back to all-time highs if they can push this enough. These are some major spots for Google too, actually. I'm going to just adjust it based on where they actually closed. Right here. Okay. And use the same differential on both sides. So clearing like a 3-point range, I think, is what would cause Google to expand.
GOLGL share is hitting $344 now. Hit a after hours high earlier around $349. That's GOLGL.
Yeah, but this is so calculated. Like getting back to 69, 33, 42, 38 makes total sense. It's exactly what happened yesterday and what we talked about here yesterday. They're calculated spots. These areas are calculated to highs. Or like at least to open close, right? Which are these ratios. And it's what gives it basically an odd of resetting this failed break back here, because this is when they held above the zone last week, remember? Okay, but then they failed to clear here. This is what basically gave us that risk when they stalled. Okay. Ideally, you wanted at least a minimum of that, but preferably, like, this is what kind of put it at risk of, like, these types of ratios here. And this is where these spots came in from, okay? Like those 33-point intervals. Do you see it? 33, 34 points. Beneath, above, whatever way you want to look at this. I think last week's spot was close to, or Monday's spot was close to 6-4. And these spots here should be close to our 70-32, 70-37. Do you see it? That's why I'm thinking that this time around they'd have slightly better odds, but they'd really have to try clearing. You see that range? It's exactly 33 points. That's pretty insane. That would make sense that they would give some good structure breaks here on these types of breaks. Specifically over here, this is a 33, 34 point range here. And the max range was 35 points, so that would also make sense. That once they basically clear a 33, 35 point range, you can get some structure breaks and be on our way. Earnings are still not printed yet, right? What do you guys think? What do you guys make of this? Banks also showed some relative strength today, which is good. Same with oil. That can technically help the market. I know tech wasn't very strong, but I feel like oil and financials, like energy and financials, held the market pretty nicely today. It's kind of flat, but still helps in terms of holding. Do you guys think it's a coincidence that they're basically trading at a 68 point range here, just above? Look at this, okay? What's our calculated spot? 68.70, 68.71. Do you think it's a coincidence that they're trading at a 68 point range here? Just ahead of this release. That's extremely calculated. Who's new here that's watching this? Because a very base way of looking at this too, because I figured that they could do some odd ranges this week, is they've been working a lot lately with basically 135 from open, close to highs, like these types of ratios. 132, do you guys see it? 139. Okay, so
CMP Compass Minerals reported 43 cents. The estimate was 26 cents. That's a beat for Charlie Michael Papa. Revenue of 396 million. The estimate was 334 million. So that is a beat for CMP, Charlie Michael Papa.
Do you see it? It's basically just the half range. Like these areas are like half the range of these very common intervals that have been happening. So that's why they have some odds basically to get it back to like 6,998, 7K. Thanks, Solo. Hopefully it's helpful. A doji makes the most sense, to be honest. Also, to make an engulfing, you do have to take out lows. So I am watching the 2-day, you guys, to see if they have a chance of maybe engulfing this before Friday, which would make sense because Amazon reports tomorrow. This is the outside bar engulfing scenario. 3-day also flips on Friday. There's a lot of flips on Friday, so if that's the case, our daily could end up looking something like this. I'm not sure if it would go all the way back to this range, but just so you have an idea. Or another way you can think of it is like the 173 point retrace. Okay. This makes a little bit more sense because of those intervals we just looked at. They're closer to like 70, 32, 70, 35, 70, 36, 70, 37. And by those intervals, I'm talking about this. See how we just discussed this? These things here, that 33 points, okay? There's a lot of confluence around there. And we opened in the channel this week, so there's some pretty decent odds of getting it back to a channel, okay? So can you write that down in the chat, one of you, please? This 173 point range off lows equates back to 70, 35, 36, 37, whatever that range is. It's also the equivalent of Izzy saying basically that's the net differential of 33, 34 points off that stall that we had on the 29th, okay? And that's when we failed basically to get those structure breaks above 6997, 6998. It's also the same 33, 34 point range differential beneath 89, which took us back to 6466, okay? They all basically net the same thing, but I want you guys to see it from like a range perspective, how it's the same thing. Which is roughly 173 to 174 points. This is Does this help you guys see it a bit better? Let me delete this. Hold on. Like, do you see how this could be the risk if they don't break these ranges? Like, how stalling 6966 is so bad? Okay. Do you see it? This is from an overall highs to lows perspective. Okay. This is why this would be the retest of 99. Okay, which is what we failed last time. That's what we failed here. This area here. Okay. These were the failures here last time. Hence testing there, okay? Do you see that? That's linked to 7K basically. So current lows, or failing these current lows, I should say, like off 6824, could still get you back there, but it would put you at that risk. Whereas these current structures are closely linked to like 7036, 7039, 7020, 7034, okay? 173 point ratios should basically take you back to the net differential of the 33 points here. That's the best way I can describe this on like a wider format, okay? Because they triggered this, which is what could re-trigger this, okay? And off of these areas here, this is what would put basically our 69, 30, 22, these areas at risk, okay? Maybe this is a more clean way of looking at it. Do you see it? There we go. I think that's the cleanest that's going to look. So you could technically still go down to 68, 30s, and 20s and still be safe. It could still get you back to 7K, but ideally if you hold these ranges here, it could get you a retest of highs. Okay? And offset that differential or whatever that case is. And then off where they actually made these higher lows, this is what could get you the wider structure breaks. Hopefully that makes sense. And that's why there's so much overhead in this area here. Why they're just stuck here. At the 68 point range, basically. Or you can think of it as like the 33 point range in between. I still didn't see anything. Did you guys see anything come out yet or hear anything? What time is this even scheduled for? Look, progress still in play. Okay, I'm gonna reset the chart. These are really calculated areas to close us in today. Like, I feel like getting back to the channel it makes total sense. At a minimum, I want us to close this session above 69.24.26, ideally over 3.3. Okay? Obviously, breaking over 4.2, 4.4, 4.8 is going to be the better case scenario. But this just seems extremely calculated. So I'll stick around until close. We've got 9 minutes to go. This should help you in terms of your overall weekly risk reward. I should have joined the stream on Discord so it could have recorded notes for me. That's what I'm going to do going forward. Okay? Going forward, I'll do a Twitch stream, but I'll join my Discord live just so that the transcription can take notes. And then I could send it in a note format too. I feel like that's easier. All right, but can at least 5 people answer like that? If there's been on average 30 to 40 people watching, do at least 5 of you understand the calculated spots now, or understand like the areas of risk reward? Like, I should be able to ask you, what's our max risk for the week? What's our max reward? What's a mid risk? What's a mid reward? And you should be able to answer that. Like, I feel like it's pretty straightforward. And this is everything we discussed on the weekly report. These are the exact ranges on the weekly report, and they're playing out in real time. So I already had our max risk as these areas, but I want you guys to see it and see why. Okay, so I want you to see why 678892 is a max downside, 6822, 6832, 42. Okay, I want you to understand why 6924, 32, 42 are calculated. Okay, I want you to understand why they're correlated to 7,000, 7,004, 7,016, 22, 28, whatever, 32, and how they're linked back to highs. Okay, so like your 70, 38, 42, but also how they can extend you to like 70, 49, 58, 66. Like, you have to be able to see the whole picture on this. Okay, so I think them taking it back to the channel makes total sense, because we started the week in the channel, like, and it's midweek. Usually what that means is you can end up, and sorry, my template got deleted over the weekend, so some of this has to be remade. But usually heading into the channel means, or opening in the channel means, you can head back to a channel. So protecting this area here is what could give us an odd, okay, of basically getting back to this channel, which is essentially our highs. Closing in the means and sustaining the means, so 6864, okay, 6961, is everyone still with me, is what could give you those odds of breaking to this area here. Okay, that's just on a wider scale. And this is just based on like overall risk reward odds, where they're kind of stalling, why they kind of came back to this range in here. Yeah, it's not necessarily always highs though, but what do I know, right? You have to understand the risk on both sides, right? If they hadn't taken it to like 6933, closed at 6906, 11 minimum, do you get what I'm saying? Then you could have had an odd of getting to our channel beneath, okay, which is 6842, 6838, and you just saw how calculated those ranges are. It makes sense. Those are the 32, 33 point ranges beneath, right? So another way you can look at it is like off of today's open, what's our overall range today from highs to lows? 103 points, right? Do you see that? If you did 103 points beneath today's open, what does that give you? This is just an easier way to look at it if this is a bit more confusing for you. If you like sticking to highs, lows, open, close, this might be easier. Okay, if we look at just from opening ranges, so today's real-time open, and these were like the closing ratios yesterday, and today's real-time open was 4925. Okay, if we're looking at it just from an open close ratio, highs to lows, this was 103 points. Okay, from an open close ratio, if they had failed these areas here, okay, do you see how that would trigger our channel? Your highs and lows are linked to your open close. You open in the channel, you close in the channel, you're linked to the channel. Do you get it? Do you see it? Like, it has to make sense. There's no way it wouldn't make sense like this. Off of today's close, which is likely going to be close to 693233 because that's a very calculated spot, and we already know that. Do you see how that could put... It can still technically put this channel at risk. Okay? 6831, 33, 38. You have to understand it from a range perspective. It's like... And I haven't even looked at this, but I wonder what this would be. This has to be 7036. Wow, that's insane, you guys. That's actually crazy. But that would also be 7036, 7037, 7038. Isn't that wild? And if we adjust this to the actual areas that we closed, I bet you anything, or opened, 103 points. Let's just clear this. 103 points up probably takes us back to highs. Yeah, it does. Back to our 7041, 7043, etc. 103, 104 points. Open close ratios. Okay. So do you see how real-time opening range today of like 4.9 is like closer to that 5.4 area? Hence that 5.5, 5.6 are more closely linked to 5.8. So does closing in here give you odds of stalling? That's why you want at least 69.32. Okay, that I think that would give us like the best odds of at least trying to get back to the channel above, which was is 70.33 plus. Does that make sense, you guys? Like this is a perfect example of like a channel to channel battle. Okay, like look at where this is. Look at the highs and lows. This could literally take you back to your previous channel. All right, guys, 1 minute to go. Where do you think they're going to pin this? Pretty calculated that they would pin at 3.3, I think, especially around this area here. Don't forget, too, that this is also the... This is also the 68-point range off lows. Okay, so that's why I was saying I would prefer that at a minimum they close here. Do you see how calculated this closes, you guys? Please tell me you see it. Please tell me that you guys see that, like, 68 point calculated close. Please tell me that you see it and I didn't just spend an hour trying to explain that for nothing. Like, it's a pretty calculated area to close this. And it's around that 6930.5. So I lied, actually. The minimum would be closer to there, but it would have been a lot better around 3436. So 6928 is okay. I think that still puts us at some risk. And the reason I say that is because they still managed to break us just slightly above, even though I would have preferred that they closed us closer to like 33.4. It's still above that 2426, which was our minimum. They kind of left it like right in between. And I feel like this is almost always the case when they want to leave some risk on. So it's like right within this box range here that we were talking about. And if you guys remember earlier too, I know it's a lot of math and I'm trying my best to not overwhelm you guys, but let me go back and find it. Okay, remember how I said market had implied odds of like these intervals? I think the exact interval was 61.5 or something like that. Off open close. Okay. Yes, exactly, Snack. Okay. So I'm not surprised that they, sorry. Okay, are kind of leaving it like kind of like right in between. Do you see that? And Snack just made a good point too, because this is like half of that 33. Do you see that? And the same thing as that 2.75 to 3.5 offset that we've been seeing constantly. 2.75 to 3.25. Again. So I think conditions, since the 6th is our big flip this week, meaning the 5th would be the final day, I think we'd probably want to open closer to 60-30. Obviously over 3-3 would give us the better odds, like closer to 3-3-3-4, but I think that would be the case. And then if we really want to avoid risk for the remainder of the week, I do think that we now have to sustain above 6906.11, ideally over the, probably over the 20-22 area. Like that's going to give us our best odds of taking out 6-6. Otherwise, it'll leave this open risk. Okay. I feel like this was a really informative session, guys, so please try understanding how these closing ranges are directly linked to these spots, okay, and how they keep risk on, risk off. So 6924, 6926, 6928 isn't bad, but 6930.5 to 6934 is better. So it's kind of still giving us that same sort of slight fear, and that you can kind of feel it in here where like you have like a little bit of breaching range and keeping it in a controlled type of manner. And it makes sense during a big earnings week, and specifically with NFP this week too. So okay, I'm gonna wrap up the stream, guys. I hope you enjoyed it. Probably, I don't know if I'll stream tomorrow. We'll see how I'm feeling, but I don't want to strain my voice too much, so it's better by next week. But it's completely up to you guys. Do you want short notes tonight? What do you guys want? I did the stream for After Hours too, just so that you guys at least have a more visual way of looking at this, and you can go back and replay it, but it's completely up to you guys. I feel like it's pretty standard. I'm going to just honestly probably recycle and reuse everything we talked about here, because it's pretty documented. Like, I think it's pretty common sense now that if we clear here, then we can get back to 7K. We clear here, we can get back there. So, and we fail here, we can get back to the channel, and so on and so forth. And obviously we need a catalyst to do that. So